as we enter into today's let me see, we're here. Okay, thank you. Okay, thank you very much. Today we are going to be looking at the topic that we had to discuss last time, which was all about the cryptocurrency markets and exchanges. Yes, of course. We've had several topics about cryptocurrencies, and right now we are going to understand more about what really markets are. But in an understanding within the classes that we had before, let me try sharing I'm already sharing my screen, but I want to go to CoinMarketCap. Okay. So before we talk about cryptocurrency markets, we need to understand what really cryptocurrencies are. But in a layman's understanding, someone you can find anywhere in the world doesn't know the evolution, how it is moving. The simplest way I can say about cryptocurrencies is that it is just people money. Yes, it is wonderful, or people might wonder how does that come to be? Like, how come that we can have people money aside fiat currencies, which are government money, or money that is given by the governments, or national currencies? Okay, let me see. Okay. So in this, as we discuss more about cryptocurrency markets, we need to understand that a variety of what is into the cryptocurrency markets, it's just the cryptocurrencies, or people's money, or cryptocurrencies. And as I defined it to be, cryptocurrencies is just people's money. Why are they called people's money? It is owned by the people. Participation is more of the people. People are the ones controlling that money. This is where we've been saying the national currencies or fiat currencies, where we discuss more about the governments and their currencies and how they distribute it within the communities. So distribution is something that is very important within all sites, but here we are discussing something more that needs people to understand that this is another way on how people can issue currencies within the same kind of environment, but with the advanced control, whereby people are the ones that are controlling themselves and calling up for freedom. So as we said, that there is a gap between the power between the people and the government, right? The power between the people and the government. But again, it's not only the people and the governments only, but there is also the gap or the power in terms of that gap that is within the governments and the governments. There are those big nations, for example, those that are controlling the banks, or those that are controlling currencies, Remember, not every country is controlling its currency. But again, when you hear the issue of cryptocurrencies are coming in to remove that gap that has been happening between it. It might be amongst people or amongst those governments that are poor, or those governments that do not have power, maybe to say something. And now with cryptocurrencies, there is a way how they can reclaim their power and maybe have some kind of control to their economies. So the start of this journey came with the initiation or with the start of Bitcoin. Remember, we are going to be looking at the cryptocurrency markets, but again, we need to understand why really they exist, because as we look at these markets, as we are going to be seeing them, we are going to see that these different currencies, right? Because here we are having a website which is hosting the different cryptocurrencies, the different cryptocurrency prices, the charts and market caps or market capitalizations, which people need to look at and maybe have a decision or come up with a decision on what they are going to invest into. So because cryptocurrencies have different kind of problems, but it's not only the cryptocurrency market, but all markets have their own problems. But again, because cryptocurrencies are digital currencies, there are more problems because people think that many of them think that online businesses are just scams. As we discuss this, being that this cryptocurrency market, it is now one of the fastest growing environments whereby people are seeing more freedom or are seeing more advantage what has been existing maybe into the traditional way of banking, and then having the ability of the technology, the nature of the technology that is powering up this kind of infrastructure, where we are now discussing what we call a face-to-face transaction, or how we can do face-to-face transactions or peer-to-peer transactions. And this can be witnessed where we use cash, paper money. You come with money face-to-face. As you make a transaction face-to-face with your money, that is the only way, or that is an achievement you can have while you are using any currency, maybe like Bitcoin or CashTelex, the way how it is programmed to be, that it has to be directly from a person to a person, unlike where we've had systems where there are government interventions, or where we are seeing owners claiming this is the owner. You find that even a dollar is not owned by the the USA. It is a certain kind of organization that prints it, that owns it. So that kind of mediocrity, that kind of something that people do not understand, yet they're using something they don't know. And now there is a way how people are creating these markets for them to reclaim their power. And now, once we talk about cryptocurrency markets, one, we can understand that cryptocurrency markets, by definition, is a global digital marketplace where various cryptocurrencies are bought, sold, and traded. So you can buy, you can sell, you can trade cryptocurrencies. And onto this website, the reason that's why I'm trying to show you this website is to show you how advanced this world has gone. Because as you look at a certain cryptocurrency, think about a problem being solved. Each and every cryptocurrency has a certain problem it is solving within our daily problems. So as we discuss, Bitcoin being the first cryptocurrency that was initiated in 2009, it came with an advantage of a peer-to-peer transaction or a peer-to-peer way of transacting money, which was not available. Because as you need to do some kind of banking, you need to go within banks, which is tiresome in one way. You look at those steps that you're going to cut out from opening up an account to how you're going to deposit and maybe withdraw your money in a bank. There is a process that is really hard for some people, and that's why you find that people can go owed without an account. So with this, once we discuss the Bitcoin, we shall understand where it comes to have the Bitcoin market. But now here, we have Bitcoin being initiated in 2009, but one of the benefits was a peer-to-peer transaction. That's, like as I've said, that the only way we can have a peer-to-peer transaction is once we are transacting cash. You have your paper money or paper money. You're with a friend directly, you give him money, or you transact directly without going into any intermediary. But once you enter into any other banking system or mobile money system, then there comes in the middleman, which Bitcoin or the Bitcoin system looked at that as a problem or an hindrance to people to make transactions or for markets to have some kind of inflations in one way, the other. So as we look at this, Bitcoin, we are going to see where it becomes a market. It is a system, but again, it has its own currency, right? So you hear people, I'm going into the I want to trade into the Bitcoin market. But again, many people out there, you will find them telling you that I was scammed, right? I was scammed. They told me it's Bitcoin is what? But it's because they had little knowledge or they didn't understand what they were buying. And now the essence of bringing in these classes is to let you know what you can trade and what you shouldn't trade. And that's why we discuss more about the two approaches that I talked about earlier, which is the fundamental analysis, which emphasizes long-term investment, where you look at a digital asset and maybe look at what it can do within a period of time. For example, once, for example, you have a digital asset like CashTelex, then you question what is the problem CashTelex is solving. Then you get to know that yes, it is asset backing, it is bringing in value. Or then you look at the other assets like Bitcoin. What is the problem of Bitcoin? Yes, it is solving the problem of peer-to-peer transaction. But again, what is its problem? It has the volatility problem. But again, why do people, why are they buying it? Or why are they holding it? Because at the end of that, we all know that Bitcoin cannot go back to maybe, for example, 15,000, right? Because of the nature. Like, for example, here you can examine its percentage in the circulating supply and the maximum supply. Because as you look at the way how it was distributed amongst people, it means that since Bitcoin has 21 million Bitcoins that has to be circulated within the community. Remember, I said that cryptocurrencies are people money. And that means that Today, to find someone having, for example, 5 Bitcoin, that is a rich man. And that means that there is some way that person had some information about Bitcoin, but it's hard to find a poor man holding Bitcoins because it's not for a poor man. That's why they say Bitcoin is gold, because people know that no poor man has gold. It's only the rich that hold gold. And Bitcoin, because it is transferable, or in any way the other, there is the way it can be, it is easier for it to be exchanged. It is easier to exchange it from one currency to another, the way it is designed. Unlike other commodities or any other assets that we have, other assets that are available. For example, someone has a house, but someone can have a house of 2 billion, and then he might end up selling it at maybe 1 billion. It is worth 2 billion, but because of how to exchange it, the easier way to exchange it, it is not easy. Then you find that he is manipulated, and at the end of the day, he is giving it at a penny because he has nothing to do. Maybe people are chasing him, they want some money. So at the end of the day, these digital markets are bringing exchange advantage closer to everyone, that they can sell their assets at will, at an advantage. So these markets, the cryptocurrencies, we've said that they are global, or they are global digital marketplace where various cryptocurrencies are bought, sold, and traded. And we need to understand that these cryptocurrencies, as I've said earlier, that it's just people's money. Again, since it is people's money, there is the way they are designed to have value. And that's why we discuss more about limited supply. Here you can see that Bitcoin has the maximum supply of 21 million, but again, the circulating supply is 19 million plus, as you see it, 19 million plus. But for you to know the circulating supply, or you're saying today it is worth 26,000 plus, right? But for you to know the market cap of Bitcoin, you're going to multiply this, the 26 plus the circulating supply, because it is what is within the market. It is what is distributed within the market. So people are holding 19 million plus until this that 21 million is going to be distributed amongst people. That's how the system works. But again, even when you go to those that have much or billion tokens, you're going to find that those tokens are going to have a coin ban. They are going to be reducing. They are going to be destroying, making the market, or they try to create demand within the market. So the cryptocurrency market is always going to create value for its own people. And that's why today we are looking at what we call use cases. The reason that's why today we buy cryptocurrencies, it's not like before where people just bought, like you're buying Bitcoin. Bitcoin is thin air. But again, the more people demand it, they hold it, it can create its own value. But again, volatility, as you look at its volatility, many people are fearing to invest into Bitcoin because of its volatility. Now we have another option, that as we introduce CashTelex, this CashTelex on the market, it has an advantage to create a market where people can invest their money and have some kind of sleep, or they can have some kind of relief. So it is an advantage that only can lead to many people invest into a certain kind of currency. So as we look at these markets, for example, Bitcoin for peer-to-peer, then we go to Ethereum. You're going to see that Ethereum is also a cryptocurrency. We are going to look at three, maybe like three, then we can go to the exchange. When we look at Ethereum, Ethereum is a system, but also a currency, but a currency which is solving a problem for smart contracts and decentralized applications. Remember, there has been a problem for smart contracts. For example, people were used with ordinary systems where we agree. We have, for example, we've had organizations where, for example, where we go into agreements. We just write things. But now we want automated kind of laws or automated contracts. These contracts are automated that they can be fulfilled at any time within the time that they've been coded. For example, at that time, for example, if at all someone has, for example, once you have a machine home and you set it 5 minutes, for example, you're going to use that machine for 5 minutes. If at all it is going to be used for 5 minutes, you set it from 1 minute to 5, exactly at 5 minutes, as it clocks 5 minutes, it is going to shut down. That is it. But once you look at contracts that we make, for example, in our ordinary lives, you may find that there are lagging kind of, there is a way we are not respecting them. In a way, you can have a contract with someone. You make a contract, for example, as regards time. I'm going to meet you around 7. You go, you reach at someone's place at 7, but someone is not there. You wait for them until 9. But again, you had a contract for you to meet at 7. So such kind of, it could be not only even in meetups, but it is also in terms of payment. Someone is paying you on 30th, but again, at the time of payment on 30th, they are not available. So these smart contracts that are encoded are bringing in a real kind of trust, because for them, they execute everything in real time. So Ethereum came up with the idea whereby people can build onto their smart contracts. Organizations, every kind of organization can build its own contract onto that. And then that's why we say that Ethereum also is to live, because you cannot remove contracts within societies and then they move. So many people are adopting these smart contracts, as well as other ways on how these markets are being built. So we are trading assets, but these assets behind them, they are use cases, or there are uses that people are benefiting. Some of them are using the benefits, but others are trading the assets themselves. So lastly, let me discuss something small about the USDT right here. As we go to exchanges, the USDT, it has also its own market, but it was brought in the later stages where they wanted to actually have a market to balance the market. Like, for example, the USDT is a peg of the dollar. It is a stable currency. Stable currencies, sometimes it refers to the peg of a certain, it might be a peg to a certain asset, but here majorly to USDT, it is a peg to the dollar. However, with time, with the movement of time, people have seen that it is a wrong concept to base or to trade within the dollar, because it is also volatile in a way. Remember, the dollar is being printed every day, and people do not know how many dollars are being printed every year. So people are saying, how can we have a stable currency that always loses value? Remember, if at all someone holds, because many people around these other nations, for example, where I am in Uganda, you may find people saying that I have a dollar. Someone, once they have dollars, they look at it as huge money, or it is money with value. But again, people in America holding the dollar, they cannot tell you that the dollar has value. It has a lot of value. No, they will tell you that the dollar is falling, is fading, is volatile. Why? It is because they look at it vis-a-vis, or they look at it in a way whereby they are buying things. They are going to tell you that something they bought at $5 maybe 10 years back, it is now at $10. So that shows you that the dollar is also volatile. And that's why many systems today are coming up with what we call asset-backed currencies. We go back to the normal, which we knew before, that the gold, the silver, the dollar, you're going to hear a lot of backups, even algorithms, but algorithms have been tested, and maybe some of them have failed, but there needs to be an asset that is being put into an algorithm that can power up a best kind of currency to rely on to as regards value. So here, as we look at the USDT, yes, we use it, but this is also a market that was brought in to control some kind of volatility that we are facing within markets as we are trading. So that's how, with that, we can have the start of how we can trade within the markets, because markets are very fundamental, are very important, but we need to understand what we are really buying. Why are you buying Bitcoin? Why are you buying Ethereum? Why are you buying Tether? Why are you buying CashTelex? Remember, I said we have two approaches. We have the fundamental analysis, which focuses on onto short-term investment. For example, day traders. Once we are trading day and night, and we want money just for today and tomorrow, then we can use technical analysis, looking at charts and how they are moving. All of this you see here, right here, these movements, all of those shows that the market moves up and down, but those are just trends. And those that trade trends, they're using technical analysis. So with that, let us go to exchanges. But here, I think people can carry out their own research and try to come back and see further what I have not explained, because we are on an agenda to see where we are going. So let me see. CashTelex right here. CashTelex. Okay. As we look here, we have CashTelex right here. You can see this is CTLX, and that means that that is an asset. And here we have an exchange. But now we want to, because we say we all know that CashTelex has only 100 million shares. As we talk about the 10 million shares to become 110 million shares, and the 10 is from only mining, but 100 million is distributed amongst people that are investing into it. But what we have, the difference that we have here is this exchange, the CashTelex exchange, which we call a money-making machine. Remember, as we discuss about exchanges, what you have to know about exchanges are, once you want to define them, exchanges are just online platforms that facilitate the buying, selling, and trading of various cryptocurrencies. I think that is what you should know. But here, as you look here, you're going to understand that CashTelex is a centralized exchange, right? So there is more information you're going to know after the evaluation of the CashTelex value, and it is brought onto the market, whereby you're trading CashTelex but knowing its real value, that this is the CashTelex value. For now, people are buying CashTelex. It's like onto the black market, because nobody knows the real value of CashTelex. But once audit is being done, everyone will know what is the real value for CashTelex. So for those that are coming in to buy CashTelex, you should be knowing that CashTelex is built onto a unique system, which is solving several problems that the cryptocurrency has been facing, especially volatility. And again, we are going to test this and see how really it is going to perform. So it is good news for those that follow news, because there are those that buy news, right? People just say, hey, something is opening up tomorrow, and then they buy. But this is not the same way, because I don't think that there are people that are going to afford CashTelex as buildings are going to as they begin constructed. So it is time for people to buy now, because it is already, it has shown that the sign, it is there. Remember, people have been fearing, and they have this essence of saying that there are many scams around. How do we trust the system? But that shouldn't be the matter. CashTelex has shown you that CashTelex are entrepreneurs, and the difference between entrepreneurs and the scammers, it's just the intentions. Where have we come from? Look at where we came from 2009. But because this is a unique kind of asset that needs to be demonstrated, that needs to be distributed in a unique way, because even distribution has a problem. Once you distribute a cryptocurrency without curiosity, you may end up having those, you hear dumps, people dumping. But as you give them an asset they understand, then at the end of the day, that means that that asset can go, or that asset, once they understand it, they can use it maybe to create wealth for themselves as people. So CashTelex is a centralized system. And again, people can come back here and maybe look at these kind of links. But now for me, I'm going to go to the CashTelex BTC market, as we are going to look at something small. Then we shall have to close up. So let me try to log into the account. As I said earlier, an exchange is just an online platform that facilitates the buying, selling, and trading of various crypto assets. But what we're seeing there, those were what we are seeing here. For example, let's go back here, where here onto cryptocurrencies, right here. What you see here, these are all markets, right? These are all markets. You just have to question yourself, how many cryptocurrencies do I know? Or how many cryptocurrencies have I ever invested into, right? And here you can see there are 1.8 million plus cryptocurrencies, and exchanges are 660 exchanges. Capitalization, it is 1.05 trillion. So that is a big business. And Bitcoin is dominating with 48%, and Ethereum is 18%. So that shows you that Bitcoin is dominating, and there are many reasons as to why. Even it is going to dominate the future for reason of that trust, the confidentiality, integrity, those things we are talking about, availability. So we are now looking at the exchange right here. We are going to talk about the market, because as we talk about the market, let me take mirror. Okay. Okay. So as you provide your capture, I'm logging in because I have an account with the CashTelex exchange. So I sign in. So now, with exchanges, there are two types of exchanges. We have the sexes. There are what we call the sexes, or central. There are central exchanges, and there are what we call decentralized exchanges. So the centralized exchanges are those exchanges where you have to register, like they are controlled by a central entity, right? But you have to register, put in your information. There is more of that criteria, right? But with decentralized exchanges, these are exchanges that are controlled by smart contracts. There is no way you're going to put in your information. No, it is just an exchange. But once you want to maybe trade onto it, you just have to plug or to connect your wallet, buy and sell, and then leave. There is no way you're going to be questioned, maybe what is your email, what is your name, what is such thing. But for a centralized exchange, because it is centrally managed, they are going to ask you some kind of information. For example, an email, it could be a username. It depends to the criteria, what the exchange wants. But majorly they use emails and the passwords, maybe, and the authenticator, because that is part of the information they give out. So now, we have entered the CashTelex exchange. And now, here, we have something small I want us to look at, then we call it a day. We talked about the markets, but since we've understood where we've come from, that there are markets, each and every, here where you're looking at all markets right here, each and every kind of row here, a row, this row is a market. This one 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 is a market, right? But they are trading. They are in trading pairs. They have to be two. You're trading one against the other, right? If at all I want to buy, for example, right here, for example, we've been using, this is one of the active pairs in the CashTelex exchange, and that's why you're told that always buy CashTelex using Bitcoins. Why? Because this is the active pair. But here it is, for example, let us click onto it. It is CashTelex stroke Bitcoin. But this is a market. You can look at it here. This is a market. Because we wanted to understand what really a market is. But we said that a market, or we said that a cryptocurrency market is a global digital marketplace where various cryptocurrencies are bought, sold, and traded. So here you can look at this market. This is CashTelex. CashTelex is a cryptocurrency, and Bitcoin is a cryptocurrency. But the difference is the uniqueness of CashTelex. It is held as a share. When someone holds it, you're 100% holding something with value because you have a representation of an asset within that share you're holding. That is the difference. So that makes it a little bit expensive. It will be more expensive where we are going because of its nature. So you can define it as a coin, a share, a token, whatsoever, but it has its uniqueness. That's why once we are talking about fundamental analysis we look at whether a token is being undervalued or like all of those things. But CashTelex at this time, it is undervalued for reasons Africans to acquire it first or Africans to have it first. And then once it goes to the other markets, you're going to see how really it is going to perform. There is no way you're going to talk for CashTelex as people understand what you can use it for. So another thing here, we want to look at this market. For example, this is a market, CTLX stroke Bitcoin market. And what this means is that the price of Bitcoin is quoted here. You can see the price of Bitcoin is quoted in terms of CashTelex, right? So as you want to buy CashTelex, you're seeing that the price of Bitcoin is quoted in terms of what? In terms of CashTelex, which means that someone wants, or I want to buy, if at all I want to buy or I want to trade CashTelex for Bitcoin. Here you can see once I go down here, for example, right here, you can see here, I have CashTelex right here, but if at all I want to trade it for Bitcoin, then I can say, for example, I want to maybe sell it at this price right here. I come here, I sell at that rate. I want to sell maybe an amount of, let me say 100 CTLX, 100. I put it onto the market. Where there is 80 here, you're going to see the change, right? It becomes 180. So this is an order book, but an order book, each and every market has what we call an order book. Which order book? Each market, for example, as I click here, you're going to see it is the same environment. Let me try to click on to BTC Uganda syringe as I come to them to talk more about that before we conclude. For example, as I click on to BTC Uganda syringe, what I want to emphasize is the order book, because the order book has what we call the buy orders. Here is where the buy orders are, and here the buy orders, the sell orders, and the order history. Let us look at where, for example, CTLX, UGX. I think this is the market that was once used. It might show a little bit better. Okay, you can see here that the order book here there is the sell orders, and here there are the buy orders, and then the order history. There is something I want to talk about which is interesting. For example, let us go back to the CTLX, CashTelex stroke BTC. Here, I want us to understand this, that the reason as why we say that digital markets are more powerful, are more organized, people are going to find it more easier to use them just because they've not actually understood how these markets work. And our goal is actually for everyone to have this information or to understand how to use this information for themselves, because it is the only way you can have decisions. There is no any other time where people are actually participating in the market by their own decisions than today, where you actually have to have some information about a market for you to access it. But within traditional markets, you can just have money. You do not have to go and question how much is this, how much. There are fewer people that do that. But someone, as you question how much is an orange, they tell you it is at 500, you just buy. But here is the way how a market is organized. You see, from the list as it goes to more expensive prices. So it is all about you to have a price for your own kind of share, or for your kind of commodity, or for your kind of asset. So that is something very important. So as we look at where we put this 100 here, down here, because I put an order to sell, but I would like to cancel all. The reason as why I'm canceling is because I don't want to sell, right? So you can cancel an order as long as the order has not been filled yet, right? But once you find a busy market, it's not hard for you to keep your assets just like that for that while I've done it. You just have to be sure that you really want to sell, then you put your tokens within the market. So as we drive this market to be busy, as you see, we have those tight bids, those tight asks, or the tight sales. That is how we would like the market to be, that you do not have to stay in the market longer, unless, that's why we say that within the market, you have to be realistic, that you do not have to come here and say, thank you. So I'm saying, as we progress to have the tight bids and tight asks, here as you go down here, we have where onto this exchange, where you're going to see bids. For example, here we have cancel bids, cancel asks. So here is what we call the bids. The only reason it becomes a bid, it's because this is someone that wants to buy, but for example, let me bring because people want examples that really matter. There are scenarios that happen within markets where we bid. People can bid. Even here within this market, it is okay for you to bid as long as your price, because we have volatilities, the market can go up, it can go up and it can come down, right? The only reason why you're seeing these people existing here, these ones bidding, because they think that the market can go down and then they have an opportunity to buy CashTelex. That means that they have BTC right here, and they are really waiting for those that can come in to sell them CashTelex at their bid prices. Am I understood? So here, these are the sell prices, or the ask prices. Someone is saying that, just as I've said that. For example, let me try some ask here to have an ask example. For example, I can say, I have 100 CashTelex, right? 100 CashTelex, and I want to sell it at 0.00000059 at this where there is 40, right? I click here, and I want to sell 100 CashTelex. 100. Okay, I put 100 on the market. You see? So it is an ask price because I am the owner of that token. I am the seller, right? I am the seller. I have the right to put or to have the ask price. Like I have the right to tag any price onto my asset. I can say, I can even change, because if at all it is not executed, I can even change and I say, I'm selling it, I'm selling each at 1 Bitcoin. It is okay. The system can allow me, because there is no way the system there is no way the system is controlling my my price, maybe my ask price. I think that is okay for people to understand. So I can change my mind at any time and give another price if at all I want. At the same time, these people down here, they are doing the same thing. Because they do not own CashTelex, they have their own Bitcoins, right? So someone is coming with this amount of 0. This is each at what each is being bought, but this is the amount where they're saying that we have a total of this. You might find that there are like 3 people that are coming in to buy the 8-3, just as here we've done that. We have 140 CTLX, but there are about, I don't know, it could be because I've put 100 CTLX onto this onto this line. We have 140, but I have put 100. Let me try to cancel that ask price. Maybe I'm saying no, I don't want to sell. Then it is removed. So we can come and maybe we merge, like we can come and merge ourselves about 100 people onto a single price. But what happens is that the faster you come and maybe in the line, the faster you come, you put your token or your asset in the market on that price, the faster you're being bought. We can come and become 1,000 people here. We maybe bring 1 million CashTelex, just like here. But the first person to have put at that price is the first person that is going to be bought. But no matter how fast you're going to come, and then the other person comes and put at a cheaper price, the one that is cheaper is the one that is going to leave the market fast. That is how the market works. So it is all about how cheap your asset is, and it is how fast you're going to leave the market, until how the system organizes you. That's how it is being done. So it is organized in a way that everyone is having a right, or is having a right. Like, for example, we've seen that even once transactions are not executed, you can see that you can change your mind. So it is all about you and your asset, you controlling your asset. You can give different prices. It is you and the system. That is what I can say. Even these ones, the bidders. So it is not good for you to always say that you're buying an asset at that time, because sometimes it goes down. But because we have different ways of investing, where we are seeing that there are those that are buying for long term, those that have fundamental analysis, they have long term. It is, for example, I can decide today, I say I want to buy 2,000 CashTelex. I come, I just buy because I want to hold it for 2 years. It is okay. But there are those that cannot do that. They say, I want to buy at, I want to buy maybe 500, but less at the price at which CashTelex is being sold. And they just have to wait. For those that say I have problems, maybe they put it they put it at a bid or lower than these prices, or they just come and they just execute it with these ones that are just bidding. So all scenarios are happening within this market, which is in a transparent way. It is actually you and your decision. I think let us end with that today, but I would like you to understand more of the order book. You read more about the order book, which has the sell orders, the buy orders, where we are seeing the bids right here, and then the order history, because you need to understand how your tokens are being, maybe whether you sold or whether you didn't, because we are finding more problems where people have sold their tokens and they're saying we didn't do anything, yet they did some kind of transaction, or they initiated a transaction within their exchanges. So as you understand this, how to start selling and how to buy and sell, then there's no way you can say I sold while I don't know. You will always know, because information is there onto the ledger or onto the blockchain that you can see. You can see maybe your transactions you made, even all transactions that have been made throughout. So it is good for us to understand that. Allow me to end this class. Thank you for coming in. But always, I urge you to always have a book where you write what you've not understood. You may question what you've understood. Try to practice it, because through repetition you can be better traders. You can be better users of the system. Then the sky is the limit. Let us call this a night. Thank you for joining us within this session. Let me wish you a good night.
Good night. Thank you. Welcome.